What is up, investors? Welcome back to another episode of Everything Crypto, where we talk about everything related to the crypto markets, including the latest and most important news, deep dives on projects we see as having huge potential in the future, as well as technical analysis on all coins featured on the channel. As always, please remember that nothing on this channel is financial advice, but rather my own thoughts, opinions, and research that I have compiled and broken down into a more digestible format for you, the viewer. So all you got to do is sit back, relax, grab a drink, and enjoy. And on that note, if you guys do enjoy the content on this channel, if I help teach you something new about the crypto markets, or if I just help give you a little bit of a different perspective on crypto as a whole, please do consider hitting that sub and like button. For those of you who have been with the channel for a while, you know that I do not practice milking extra money from my viewers through paid buy and sell alerts. I am fully transparent. I put everything out here on the channel for free for all of you to watch. I post on Twitter and communicate with the community as well. And I mean, you can see even here that I tweeted just an hour ago that I have been scooping up some ETH, HBAR, and XRP over these past couple of days. Okay, once again, never financial advice, but the point I'm making here is that I do not make my viewers pay extra money for buy and sell alerts, for basic transparency, okay? We put that all out here for free for you guys, and if you do appreciate that or if you enjoy the content, all I ask is that you consider hitting that sub and like button to support both myself and the channel. And I love and appreciate all of you who have supported me and contributed to the community so far. So we're going to get right into today's news, as we have a couple of breaking news pieces, okay? But the first piece of huge news came out of Ethereum and the incoming upgrade to Eth 2.0, okay? We also had some breaking news regarding XRP and their lawsuit, and we're going to get to work on that video right after this one for you guys. So let's just get right into what happened with Eth 2.0. So basically what we have finally seen is a successful merge to proof of stake from proof of work on the testnet, okay? This was the first successful merge from proof of work to proof of stake. There are still a couple of hiccups that they are working on right now, but the merge was considered to be a success, okay? And for those of you who don't understand Eth 2.0 and what's happening and why it's such a big deal for Ethereum, I'm going to break that down for you guys right now because it's really important to know before Eth 2.0 comes, okay? So Eth 2.0 is an upgrade to the Ethereum blockchain, which aims to enhance the speed, efficiency, and scalability of the Ethereum network so that it can process more transactions and ease bottlenecks. So how does proof of stake differ from proof of work? So with blockchains such as Ethereum, there is need to validate transactions in a decentralized manner. Ethereum and other cryptocurrencies like Bitcoin currently use a proof of work consensus mechanism. And the proof of work mechanism basically consists of miners using a machine's processing power to solve complex mathematical puzzles and verify new transactions. The first miner to solve the puzzle adds a new transaction to the record of all transactions that make up the blockchain, and they are then rewarded with the network's native cryptocurrency. However, the big issue with this, and one that we have seen come to the forefront really over the past year, is the energy intensive process of proof of work mining, okay? So proof of stake differs in that instead of miners, users can actually stake their network's native cryptocurrency and become validators. Validators are similar to miners in that they verify transactions and ensure the network is not processing fraudulent transactions. Now, the main advantage of proof of stake is that it is far more energy efficient than proof of work, as it decouples energy-intensive computer processing from the consensus algorithm. And it also means that you don't need a lot of computing power to actually secure a blockchain. So with all this said, how will Eth 2.0 actually scale better than Ethereum? And one of the main reasons is the scalability. So with Eth 1.0, the network can support around 30 transactions per second. This causes delays and massive congestion in the network. Eth 2.0 promises up to 100,000 transactions per second. The increase will be achieved through the implementation of shard chains, which we will discuss in a second. So basically, the current Ethereum setup has a blockchain consisting of a single chain with consecutive blocks. This is secure but very slow and not efficient. With the introduction of shard chains, this blockchain is split up, enabling transactions to be handled in parallel chains instead of consecutive ones, speeding up the network and allowing for more scalability. Now, in terms of security, Eth 2.0 has been devised with security in mind, and most proof-of-stake networks have a small set of validators which make for a more centralized system and decreased network security. However, Eth 2.0 will require a minimum of 16,500 validators, making it much more decentralized and hence secure. So originally the plan was to work on shard chains before the merge to address scalability. However, with the boom of layer 2 scaling solutions such as Polygon, the priority has shifted to swapping the proof of work to proof of stake via the merge to Eth 2.0. And yesterday we basically had our first successful merge on the testnet, okay? So the participation rate was above 98%. The network is stable with over 2/3 of validators correctly finalizing, although one client is not producing blocks consistently with devs looking into the issue. But this one client is having no impact on the overall network. So this is being considered the first successful overall merge, okay? So there are already more than 106,000 validators on the testnet. And seeing it all go well suggests that the live launch will most likely be around summer, when Ethereum will become deflationary based on current data, as the burning is running at 2,500 ETH a day, while the daily staking rewards are about 1,500. This means that 1,000 Ethereum a day will be taken out of total circulation, giving Ethereum an inflation rate of negative 0.5% a year. In total, therefore, new supply will fall by more than 100% based on current data, from about 36 million a day to a daily buyback of about 2.5 million worth of ETH every day. And the network will become very environmentally friendly due to a 99.95% reduction of energy demand, as GPUs will no longer be needed to secure the network, nor any extra hardware. And all this has pretty much begun with the current proof of work Ethereum network entering its final days as it countdowns towards its transformation to proof of stake after 5 years of intense development towards this goal. Now, the market has definitely started to become more aware that the Eth 2.0 upgrade could be incoming any day, and we now have over 26 billion worth of Ethereum staked in the Eth 2.0 deposit contract, okay? So according to the ETH search engine Etherscan, there are now over 10 million staked Ether worth a staggering $26 billion. The amount of ETH staked in the 2.0 contract has surpassed the 10 million mark. More than 66,000 unique addresses have contributed to this achievement, which translate into 8.4% of the total circulating supply of Ethereum being staked right now. That is absolutely wild, okay? And what we can actually do is go over to Etherscan here, and we can look at the ETH 2 deposit contract. You can click on this if you want to actually check out the deposit contract itself, but here is the validator contract. They talk about the change to proof of stake, how you need to have 32 Ethereum to actually become a validator. But what Etherscan does here is it is constantly updating us on the value, okay? So you can see right now that we're actually sitting at a balance closer to 10.4 million ETH with a value of $28 billion locked up, okay? So this article was released on March 13th. And today is the 16th. So since in the last 3 days, we have seen another $2 billion worth of Ethereum, which would otherwise be described as another about 400,000 ETH into this pool, okay? So we've just been seeing massive dumps into this Eth 2.0 contract. So this tweet here from Litecoin basically really well sums up what is going to happen when ETH finally merges with Eth 2.0, why it is such a big deal, okay? And we're going to go over this thread real quick, and then we're going to get into the technical analysis of ETH and let you guys know why I have been buying some over the past couple of days. So ETH will undergo a 90% cut of daily emissions from 12,000 ETH a day to 1280. Yearly inflation will go down from 4.3% to 0.43%, the equivalent of 3 halvenings at once. Meanwhile, and this is the big one for me as someone who loves staking, rewards for proof of stake validators will go up from 4.5% to 10 to 15% in the months after the merge. At the same time, its energy consumption will drop by 99.95%, being tiny even compared to traditional payment networks like Visa. Being less reliant on the grid is not only a relief for the environment, it will be much harder for state actors to censor the network because hundreds of thousands of people will be able to run their proof of stake validators at home. And the 0.4 inflation figure is without taking into account the automated ETH burn that was introduced by the EIP 1559, which has already burnt $5 billion since the launch. And then taking the ETH burn into account, Ethereum will be deflationary. I seriously don't care about bear market or not. I am so comfortable and ready to accumulate more ETH at whatever prices. Okay, so I mean, I do tend to agree with this for the most part. To look at Ethereum in this 2,500 range, it has moved up in the past couple of hours, but anywhere in that 2,500 range on Ethereum, like I am just also incredibly comfortable buying more, and that is why I have been adding more to my bag around those prices. And then the last piece of news, which is not related to Eth 2.0, but once again bullish for ETH, is that Goldman Sachs is going to begin offering the Ethereum fund to clients through the Galaxy Digital Ethereum ETF. So once again, just more basically financial institution interest in Ethereum, and that will only grow over the years, okay? So that is pretty much all we have to talk about in terms of the breaking news with Eth 2.0. I wanted to get this video out to you guys as quickly as possible. So if you were just looking for the breaking news, well, that is about it. What we're going to do for the last part of this video is get into the technical analysis and look at some really good buy and sell levels for Ethereum, okay? So you can see right now that in the past 24 hours, we are up like 3.5%. Okay, what I see on Ethereum here is we are actually getting rejected at this pretty strong resistance at 2750, which is also aligned with our 50 moving average here. So this 2750 level is going to be really hard to break out of. And even if we do break out of it, I would actually wait for a successful breakout of 2810, as that is going to put us above our downtrending channel. Okay. So looking on ETH to the downside first, what we're looking for here is a potential retest of this 2,500 if we fail to break out here. If we come back down to 2,500, I will comfortably just be nibbling on some more ETH at this price range. Okay, and if we break down below 2,500, the first level we're looking for is 2350, and then below 2350, we are looking for 2150, let's say 2160. And if we hit 2160, that is where I will be offloading a more substantial amount of fiat into Ethereum, okay? However, to the upside, what we're looking for on ETH again is, listen, we got this strong resistance here at 2750. We have the 50 moving average here at 2760. If we can successfully break above both of these, I do think there is a high chance that we actually break this downtrending channel that we have really been respecting since about the end of November, okay? So what I'd be doing here is I would be playing the candle breakout above this 2810 level, okay? And listen, if we close a candle above 2810, we are above a strong level of resistance, we are above a 50 moving average, and we have broken a downtrending channel. So if we can close a candle above 2810, I would comfortably, you could definitely buy some more there for a quick swing trade. And this would present upside of about 6% back up to that 3,000 level. But actually, the level I would be more inclined to look at for Ethereum, if you were trying to trade it, is actually this 3175 level, which represents upside of about 12%, as this is also aligned with our 100 moving average, and this will most likely act as a very strong level of resistance. So to the downside, we are looking to hold 2,500, and if we do not, the key levels are 2,350 and 2,100. And to the upside, if we can break above 2,810 and close a candle, then we are looking for a retest of this 3,175 level. Now, with that said, I hope you guys enjoyed the breaking news video. I got to get back to work as there is plenty more news to cover in the crypto markets. So we got plenty of exciting stuff coming up. Stay tuned for more, guys. Peace out for now.